The Northstar Income Fund performed well over the quarter, delivering a return of 2.3%, outperforming the benchmark by 49 basis points, outperforming the average peer by 47 basis points, and outperforming the strategic benchmark by 20 basis points. It was pleasing to have both our fixed and inflation-linked bond holdings outperforming cash, set against a backdrop where the All Bond Index and the inflation-linked bond index underperforming cash. As a result, these two groups of holdings provided the greatest attribution to outperformance against the strategic benchmark, which talks to having been correctly positioned on the curve. Looking ahead at the drivers of returns, point one, the fixed income assets are trading at high real yields. Point two, the market is expecting an interest rate cut over the next 12 months, which lends support to fixed bonds. Point three, inflation is benign, but is expected to tick up from the current 4.3% to 5%, which should lend support to inflation-linked bonds. Point four, there are many prevailing risks, which calls for vigilance in terms of managing duration risk, holding foreign assets despite the attractively valued rand, and holding sufficient liquid assets. The prevailing risks include sovereign debt escalation in the event of a poor budget, a poorly received Eskom turnaround plan, a change in outlook by Moody's, ongoing trade tensions, a slowing global economy, Brexit issues, Middle East tensions. How is the Northstar Income Fund positioned against this backdrop? We are currently overweight inflation-linked bonds, which are trading on attractive real yields above 4%. We are at weight fixed bonds. The front end of that curve looks fully valued, although the long end of that curve does show value. We are underweight floating rate notes. Although the yields are attractive, there are potentially better alternatives. We are underweight property. The current yields, although quite elevated, are insufficient to compensate for the poor growth distribution. And we are underweight foreign currencies and bonds, and this is as a function of the rand being undervalued by close to 20%. In summary, fixed income assets are trading at high real yields. The macro environment in terms of interest rates and inflation are supportive of asset class returns. However, slow GDP growth is providing a challenge to the property sector. There are many prevailing risks which are keeping longer dated yields trading at elevated levels. The Northstar Income Fund is on a yield of 8% with an effective modified duration of below 0.8. As a result, the portfolio is well positioned to manage any material risk-off event and is well placed to take advantage of any mispricing opportunities with its 10% liquidity buffer. In addition, the portfolio has an 8% foreign cash and bond holding.